I think probably because we're heading into Thanksgiving too, that's likely to continue for a while, but I don't think that's going to be something permanent. Especially, you're already starting to see headlines drip in about the debt ceiling. We're heading towards year end. I do think kind of this level of volatility is a little bit seasonal, is a little bit related to the holiday, but is probably not something that is going to be staying at this level.
So you're saying the volatility, like inflation, is just transitory? No, I'm just joking. I'm not even asking you to answer that. But on a serious note, you're mentioning that there's really low volatility when it comes to stocks, but when it comes to bonds, we're seeing a very different story. Do you see that being a leading indicator for equities?
I do. And I actually think that's one of the reasons why equity volatility cannot kind of stay at these levels. Because, look, you're seeing a lot of crypto volatility, you're seeing a lot of bond volatility, and typically these things are highly correlated. The fact that we're not seeing a lot of hedging right now, especially with the market at highs, to me, is a little bit concerning, is a little bit pointing to complacency rather than something else. And whenever I see those tail options to the downside that inexpensive, Frank, it always makes me wonder if that's an opportunity for investors to get really good leverage to the downside, especially when people aren't paying attention.
Yeah, I was going to ask you about that. Obviously, the pricing on in-the-money calls really elevated right now, but people keep piling into it. What are you seeing when it comes to downside protection? Do people want to get in on the downside? Because, of course, everything that goes up must come down.
So unless you're, a momentum stock these days, I think part of it is when you look to kind of the retail base that has become popularized through trading on Robinhood, through other intermediaries like that. One thing you're seeing is, they really do like those call options versus those put options. We saw Rivian start trading options yesterday. You saw that activity go kind of to the moon right away. And that has had an interesting technical impact on our market because typically our market has more expensiveness on the downside rather than the upside. Retail trading has really upended that, but what it's given you is an example of a time where you can really sell expensive out of the money options to a way you really couldn't before to fund downside. That's making a lot of things like collars, for instance, which is a kind of hedging tool, almost zero cost.
So I'm not a big gambler. I don't know about you. Do you ever gamble, Amy? You a gambler at all?
I'm a poker player. I like poker.
Okay, I don't gamble at all. I don't want to lose my money at all, but I have been to a casino and I watch the roulette table sometimes. And when I see maybe 10 reds in a row, I'm like, I'm going to put a chip on black just because it has to change. With markets near highs, couple-day win streak, just in general, a really strong performance for the markets for the last couple years. Does that at all impact people's decisions to buy options, calls, shorts? Does that have a direct impact at all?
I love that analogy because, the reality is when you look at red and black, if there's a 50-50 chance, but then, you saw it go 10 times in a row, it does have a psychological impact, right? Even though the probabilities are what they are. I do think that impacts people. But, usually that means that we see when the market continues to make highs for a kind of certain consecutive days, people start saying, oh, maybe I need to put the chip on the other color. Maybe I need to do more hedging in this analogy. And we have not seen that. That's what I think is very interesting about the psychology of the market right now.